Hello everyone. Today we are doing something special again, which is to look back 10 years ago on the price of the stock market or company. It could be any company, but today we'll be looking at Google as a testing to see how it actually works, to identify throughout the years what exactly I will do if I were in that positions or in the shoes of that year, looking at the price of the stock, whether or not if I would buy, sell, or thinking like the market is going to crash and never come back. Without further ado, let's get right into it. So over here, we're starting from 10 years ago, which is 2015. So over here, the price is just consolidating. Let us just get some information more. Okay, so right now we are in a uptrend, going consolidate. So over here, if I were to start investing right now, I would eventually maybe to buy over here. And yeah, so of course, if I will be able to hold it long, it will be able to generate me profits already. And especially, it's actually above the 200, 150, and so on. So basically, we will be mostly based on the long term and also have a precondition whereby we understand Google is a great company already because we actually don't have access to all the data. So we're just going to do a precondition whereby, hey, this company is actually a good company with great earnings, great net income, which met all the criteria of my investment strategies. Right now, it's in a position whereby it's going up. So right now, if it experienced drawdown over here, maybe I will buy. Let's put two tags, buy and sell over here. So eventually I will buy here and I will buy another one here. But we are also using a similar strategy whereby it's just to buy and hold for long term. Now it's just consolidating, going up again. It's still above the 200 EMA, showing it's actually doing pretty quite well. And actually, it's been quite a while now. So starting here, it has been around 1 year and so on. But let's keep moving, and we'll be able to see that the company is just going up. Okay, I will perhaps buy another one. Where's my, okay, over here. Perhaps buy another one on this dip because it's the huge and largest dip back to the 200 EMA, and we'll be able to just buy at a discounted price instead. So let's just continue to see the price of the stock keep going up, keep going up, keep going up, not consolidating anymore. So maybe I have extra, if I have extra cash, I will certainly buy over here. I'll just keep on buying because I already have a precondition whereby the company is doing great, and for every quarters of report I investigate, the revenue is going up, the outlooks of the company looks great, they have increased guidance, they have future outlooks that they are very clear of, that investors are very strong and biased towards them, have high confidence, and that is why I keep on buying. And especially for this kind of company, this might be the situation whereby they are facing lawsuits problem, monopolies issues, and just lose the confidence of the investor to see, oh, whether or not if this company is going to break or held by the government and so on. But in reality, it's very hard to happen, especially you can see until today, whereby it's mostly impossible because after many times of this kind of issue, Google is being able to survive and create and staying all-time high right now. And you just buy the dips, buy when people are panicked, because you can actually observe that the company is generating positive revenue as well as net income, also with good financial fundamentals, as well as what they are doing is actually revolutionary and being able to provide values to their consumers. So starting from 2018, still going up, moving into 2019, we have a huge increase in terms of the price. So right now in 2020, because I wouldn't know what's the COVID situation, okay, I am only 17 years old at that time, so it's my first pandemic actually, because of understanding that Google actually is a service that provides online, provides software. How does that actually affect the company. So the price did drop, but this is the effect of people of panic. So when people panic sell, it's a chain reaction whereby you continue to sell and sell and sell. But if you look back in terms of logic, Google provides what we so-called software online services. So it does not affect by the lockdown of the COVID pandemic. However, they will be positioned whereby they might have lay off a lot of employees, so decrease the job. Most people are losing their jobs, so maybe less people can afford to spend for the services or products provided by Google. However, the services itself, or when the pandemic is likely to show recovery, people are still being able to quickly access to the service or product accessed by Google because it's not physically being locked down. It will still keep on running. It's just that whether or not if the people are still continuously buying and using their services. So in this kind of a situation, this kind of a software company that's not affected by physical lockdown, they does not require people to come to the physical stores to spend money so that they can earn, it makes more sense that this company is actually quite resilient to this kind of pandemic, but there will be some other issues such as panic sell chain reactions, as well as I mentioned, layoff. People have less money to spend on their services. But over here, I will actually click on the buy button, so you can actually see that I bought at the same place. But this is the fact that I bought 2 times. I will have what is so-called profits in the meantime. I could have sell or sold some of it, but in reality is we are currently looking at one stocks. But in reality, for a portfolio, there will be multiple options. I will be diversified across different stocks and different companies. So one of the main point is going to be if I am currently in a top, I'm holding a lot of profits, and if in that situation I actually observe better investment opportunity on other company, and especially in terms of this profit, I will actually cash out some of the profits. I would cash out some of the profits to buy better options. So this can be, hey, Meta is actually on a discount. I will cash out this profit and buy Meta. So there will be difference in terms of transactions as well as how I allocate funds, but it really depends on whether or not if there is better options or whether or not if this company just does not make sense anymore, so you have to quickly exit the company and move on to the next one. But in this example, we'll be just looking at what time will I buy, and then to see whether or not if it will be able to just keep on continue going up. But in this situation, as I mentioned, we'll be just looking at one stock, so our only exit criteria will be the fact that if the company does not make sense, start losing money, and lose its competitive advantage. So the next timing to buy this company is going to be another timing where it touched the 200 EMA. I could bought here, I could buy more here, but it depends on whether or not if my cash holding cash power is strong enough. So if I have more cash over here, I actually all in, but who knows that you are actually all in at the right price, right? So assuming that we did have a lot of cash at this point of time, we bought it over here, but we didn't use all the cash allocations. I still have some cash. I will buy here, and of course I earn more money already. I will buy here again and continue to the movements of the stock price. It will be going up. So at this point of the time, I will be perhaps very rich, okay? Because as you can see, even if I'm buying a lot at the same price point, but with a good company will perform well if time is being given. So long term is, or time is, a good friend for a high quality companies. So over here, I would have make a lot of money, and also maybe there will be a situation whereby I want to cash out to buy better options, better opportunities in terms of investments. I could do that. So right now, just move on. So I could perhaps buy at this point. So it depends on the situation, but I don't think based on the technicals I would be buying. And also moving down here, I could have bought it over here because of it's actually placing at the 150 EMA. So experience some drawdowns, so on, huge drawdown during the bear markets of 2022. And based on the previous level, and depends. So during the bear market, I am actually quite confused because I never actually experienced a long-term bear market. So COVID-19 is a short-term, so I didn't actually buy stock at that point of time. But to be considered that would I buy during the bear market, let's say the condition of 2022, I would actually buy over here because of it's actually like the falling knives it stops, but then it keeps on dropping. And in the case of keeps on dropping, I will buy more over here. Okay, especially with the V, what is it called? The V retracement. So it depends on not whether if I have more cash. If I have more cash, I will buy here. I will also buy here. So that will be my strategy. And then move on. We recover from the bear market, moving into the bull market of 2023. And if you look back to the previous high, we actually break all-time high, and I will be able to buy with a similar amount of cash. I buy more stocks over here, buy more shares over here. This will continuously make me money. And then I will actually buy more here, maybe even here, and it will go up. So this is the case whereby we have the lawsuits and so on. But at this point, right, I am quite uncertain. I do understand that this company is a very good company, generating profits machines, very high quality economic modes. It's just that it's my first time. I was a newbie at that point of the time. So if give me one more chance to go back to this time, I would actually buy at this price range, okay, around these support areas, without hesitating. But of course, I need to allocate my cash well and also understand the risk that I'm facing. So that is all the process, the thought process of back in the 10 years of the stock market. So basically, if you are investing in a high quality company stock, it can be quite boring because of the movement of the stock price is very slow, and especially the exit strategy is very constrained. You only exit if the company that you are investing in does not make sense anymore, they don't make money anymore. And the other option is, hey, my current investment is making money, and I also observe there's another opportunity, a high quality company stock, but it's at a discounted price. So I would cash out that profits to buy another investment, but of course it really depends on how much work I do, and it's better for you to buy high quality companies with recurring increasing revenue, net incomes, and very good fundamentals in terms of financials as well as their competitive advantage. So I guess that is all for this video. It's quite a fun experience actually for me. So if you are interested to look at any other stocks 10 years ago, so maybe some new company may not be very realistic or practical because that you don't actually know whether or not if this company is going to go up or not, because based on the 10 years before, at the time of 2015 the market is going up, so it actually adds extra confidence for me to buy in terms of long term. So I guess that is all for today's video. Please do your due diligence before you invest in the market. As always, I will see you guys on the next one. Goodbye.